What's going on, everyone? So let's do a quick little update on gold. Earlier this week, we had a tariff deadline of July 9th, where essentially countries were supposed to make a deal. That didn't happen. Trump came out and basically announced a bunch of tariffs on a bunch of smaller trading partners, such as South Korea and Vietnam, and essentially like much smaller trading partners than China. So even though the tariffs got announced, it held a lot less weight. The other thing is we've priced in maximum pain on tariffs at this point. So anything that's not as extreme as the China tariffs or the EU tariffs are going to have a lot less impact on the market. What does this look like for us on gold? Let's take a look. So essentially right now, gold is actually in a good technical zone of 618. And we used a little tariff threat today to retrace, just like we did last week. And essentially, price is just bearish. Now, what we're looking at is a risk-on scenario, meaning the stock market's still hitting all-time highs. And essentially, all we're looking at doing is not disturbing the pattern. So right now, if we look at our handy little tool, Market Edge AI, US dollar strength is high and the Fed rate cut expectations are just not there. Supply cuts likely not happening, so that's going to boost the dollar strength. Trump boosted the tariff deadlines into August 1st, meaning there's trade deals to be made. So again, we're looking at market optimism. For anyone that's followed any stock movies ever, 90% of them are about trade optimism. It's very rare that somebody makes a movie about a short. Big Short was one of the few. And if you've actually been watching the Big Short guy who tried shorting the NASDAQ market, he lost over 50% of his investment on it. But anyway, what we're looking at right now is to continue selling gold because the macros are aligning. Money's flowing into risk-on assets, which is your stocks, and flowing out of safe havens such as JPY, CHF, and gold. Now, I assume when we get down to September, which is a more probable time for a rate cut, there is a chance for the market to pull back. Now, if it's a quarter-point rate cut, not much is going to happen. If we get 50 basis points or more, the market hasn't priced that in, but it has priced in a quarter point. So let's just see what happens, and let's essentially just go with the order flow. So gold's still bearish, dollar's looking for a bullish pullback, and essentially we're optimism.